The US dollar is the world's reserve currency, used in global trade, international finance, and central bank reserves. But what if it collapsed overnight? Would we see hyperinflation, a banking meltdown, or even the fall of the US economy? In this video, we'll break down what a US dollar collapse really means, what could trigger it, and what would happen to global economy if it collapsed. 1. What does it mean for the dollar to collapse? The collapse of the US dollar doesn't mean it suddenly disappears or becomes worthless overnight. Instead, it refers to a sharp and rapid decline in its value relative to other global currencies, leading to economic instability both in the United States and across the world. Since the US dollar is the world's primary reserve currency, its collapse would have devastating ripple effects on international markets, trade, and financial systems. How does a currency collapse? A currency collapses when investors, governments, and the public lose confidence in its stability and purchasing power. This loss of trust leads to mass sell-offs of the currency in global forex markets, hyperinflation as the value of money plummets, foreign creditors refusing to accept payments in the weakened currency, a breakdown in the financial system as banks, businesses, and individuals struggle to adjust. If the US dollar were to collapse, the consequences would be catastrophic. One of the immediate effects of a dollar collapse would be hyperinflation, meaning prices for everyday goods would spiral out of control. Since the US imports a massive portion of its essential goods, including oil, food, and electronics, a weaker dollar would make these imports far more expensive. If today a barrel of oil costs $80, a weak dollar could push that price to $300 or more in dollar terms. This would cause gas prices to soar, making transportation and shipping costs unbearable. Food prices to spike since most food products rely on imported goods and fuel for production. Essential goods to become unaffordable, leading to economic chaos and lower consumer spending. Hyperinflation would destroy purchasing power, causing savings and fixed incomes, like retirement accounts, to lose value rapidly. The US dollar has been the world's dominant reserve currency since the end of World War II. This means most international trade, oil sales, and financial transactions are conducted in dollars. A collapse would mean other countries would stop using the dollar for trade. Nations shift to alternative currencies like the Chinese yuan, euro, or even cryptocurrencies. Global demand for the dollar drops, making it even weaker and accelerating the collapse. If major economies like China, Russia, and the European Union shift away from the dollar, the US will no longer have the privilege of printing money freely to fund government spending, leading to economic distress. A collapsing dollar would trigger a global financial panic, similar to or worse than the 2008 financial crisis. Investors pull their money from US markets, leading to a major stock sell-off, wiping out billions in wealth. As confidence crumbles, banks would experience massive withdrawals, leading to bank runs and possible shutdowns. With the cost of imports skyrocketing and financial instability, many companies would struggle to stay afloat. Financial institutions holding U.S. Treasury bonds and assets in dollars would suffer major losses, shaking the entire global banking system. The U.S. government is more than $34 trillion in debt, and it relies on selling U.S. Treasury bonds to other nations, like China and Japan, to fund its spending. If the dollar collapses, foreign investors would stop buying U.S. debt, fearing repayment in worthless currency. Interest rates would skyrocket, making borrowing money unaffordable for businesses and individuals. Government spending would be severely restricted, leading to social unrest due to cuts in welfare, social security, and public services. A severe economic depression would likely follow, with millions of job losses, social instability, and a potential restructuring of the entire financial system. While the total US dollar collapse is unlikely in the short term, the rising national debt, geopolitical shifts, and economic policies could gradually weaken the dollar's dominance. Protecting wealth through diversification, gold, real estate, international assets, is crucial in times of economic uncertainty. The question is, are we prepared for such a crisis? Let me know your thoughts in the comments. 2. What could cause the US dollar to collapse? The US dollar remains strong, but several factors could lead to its decline or even collapse. 1. Uncontrolled national debt and money printing. The U.S. national debt has surpassed $34.6 trillion and is increasing by approximately $1 trillion every 100 days. Interest payments alone now exceed $1 trillion per year. If the government prints excessive amounts of money to cover deficits, it could lead to inflation or even hyperinflation, diminishing trust in the dollar. While the U.S. has historically managed debt effectively, rising interest rates and slowing GDP growth could trigger a dangerous debt cycle where borrowing costs spiral out of control. 2. Loss of global confidence. If investors perceive U.S. debt as unsustainable or an unresolved political issue, they may move away from U.S. Treasury bonds. A lack of demand for these bonds would force the U.S. to offer higher interest rates, increasing debt costs and triggering economic instability. This could weaken confidence in the U.S. financial system, causing capital flight and depreciation of the dollar. Third, shift toward alternative currencies. Some major economies, including China, Russia, and BRICS nations, are actively seeking to reduce reliance on the dollar. Efforts to settle international trade in yuan, rubles, gold, or even a new BRICS currency could erode global demand for the US dollar. While no immediate replacement exists, a gradual decline in its global reserve currency status could weaken its dominance. Fourth, geopolitical conflicts and sanctions. Economic sanctions and trade wars have already pushed some nations to explore alternative financial systems. If geopolitical tensions escalate, more countries may diversify their reserves away from the dollar to avoid economic pressure from the U.S., further reducing its global influence. Although a complete collapse of the U.S. dollar remains unlikely in the short term, these risks highlight vulnerabilities that could significantly impact its value and status as the world's primary reserve currency. 3. What would happen if the dollar collapsed? If the U.S. dollar collapsed, it would trigger severe economic consequences, both domestically and globally. Here's a detailed breakdown of the potential effects. 1. Imports would become unaffordable. The U.S. is a major importer of essential goods, including oil, electronics, raw materials, and manufactured products. If the dollar lost significant value, these imports would become prohibitively expensive because foreign suppliers would demand more dollars in exchange for the same goods. This would lead to higher prices for gasoline, consumer electronics, vehicles, and food products that rely on imported ingredients. If the dollar were to lose 50% of its value, oil prices could double overnight, making gasoline unaffordable for many Americans. 2. Hyperinflation would set in. A collapsing dollar would cause hyperinflation, where prices of everyday goods rise uncontrollably. Essentials like food, gas, and medicine could see their prices double, triple, or even increase tenfold in a short period. Countries like Venezuela and Zimbabwe have experienced hyperinflation due to currency collapses. In Zimbabwe in the 2000s, inflation soared to over 89.7 sextillion%, rendering cash almost worthless. While the U.S. has stronger financial institutions, extreme inflation remains a risk if confidence in the dollar evaporates. Third, stock market and real estate collapse. A currency collapse would trigger a stock market crash as investors panic and move their money out of U.S. assets into more stable alternatives like gold, foreign currencies, or cryptocurrencies. With rising inflation and interest rates skyrocketing, home affordability would plummet. People would struggle to secure mortgages, and property values would drop as demand dries up. Foreign and domestic investors would flee from U.S. assets, causing a massive decline in stocks and bonds. The S&P 500 and Dow Jones could experience historic sell-offs. Fourth, mass unemployment and business failures. A collapsing dollar would slow down economic activity dramatically. Businesses that rely on imported materials or international trade would struggle to stay afloat, leading to mass layoffs and bankruptcies. Since U.S. companies depend on global suppliers, disruptions in trade would cause shortages of goods, forcing many businesses to shut down. Even if wages increased, they wouldn't keep up with skyrocketing inflation, making it harder for people to afford basic necessities. Fifth, U.S. debt crisis worsens. Since the U.S. borrows heavily from foreign lenders, a weak dollar would make repaying debt far more expensive. If confidence in the dollar evaporates, the U.S. government might struggle to attract buyers for treasury bonds, which could lead to a full-blown financial crisis. If the government is unable to manage its debts, it could lead to a default, further eroding confidence in the financial system. 6. Global economic shockwave. The U.S. dollar is the world's reserve currency, meaning many countries use it for trade and as part of their central bank reserves. If the dollar collapses, global trade would be thrown into chaos as countries scramble to find alternatives. A U.S. dollar collapse would be catastrophic, but it's not inevitable. The key is to stay informed, plan ahead, and take control of your financial future.